The first chart that we are going to be starting off with is Bitcoin on a yearly time frame. Now, I've made some annotations, and essentially what we have right here is that this band is yearly VWAP, and then we've got the standard deviation 1, standard deviation 2, right? That's basically forming the developing value on the year. Now, as we can see, it is pretty obvious that yearly developing value area high is capping upside, yearly developing value area low is capping downside. Now, for the love of God, I do not want to see bull flags like this, right? This is, I mean, come on, like a bull flag, really? Like, we are being capped by developing value on the year. Value area high, value area low, right? And that's it, simple as that. Do we have any auctionable trades nearby? Well, essentially what we're doing is we are rotational within yearly value. We've got yearly value area high there. We've got yearly value area low there. During this break lower, let me zoom in a bit more for you guys. Whoops. Like that. During this break lower, when we got capped at yearly developing value area low, we closed above a high volume point of control. We then auctioned higher. And I mean, honestly, I personally was expecting yearly VWAP to hold for another rotation higher towards yearly developing value area high. This would have been my preferred trade, right? I don't really like the Chinese is playing up. I don't really like how we're trading below rejected yearly VWAP, right? We came all the way back down. I don't really like that. However, what's good to note here is that this line here is the 2021 value area high. So it's a key point, right? It's relevant. It's from a couple of years ago, but it's still major support. We had a high volume bar there with a point of control. Then we saw the market auction lower into what? Into the high volume point of control. And this is actually where we formed the low. And we're now trading somewhere up here. It's an old image from, yes, I made it yesterday, but we're now trading somewhere up here, which means we failed to break below the 2021 value area high. We're coming off a key contextual point, high volume point of control, and we're now even trading above quarterly and monthly value, which I will show you in a bit. In my opinion, on the yearly, we are rotational between yearly VWAP and yearly developing value area low. So while on the lower time frames, you could argue, oh, you know, things are starting to look pretty good again. I'm not one to disagree with that, but I think we need to be mindful that if I clean up my chart, let me look at the chart in a bit. If I clean up the chart, this VWAP here is essentially the point of control, right, of that year. Now, as long as we're trading below, we need to expect a potential revisit of yearly developing value area low. Clean break back above, sure. At that point, I'll play this game, right? Towards yearly developing value area high. But just be mindful that while we can play lower time frame rotations, higher time frame in terms of a yearly value is still suggesting that, hey guys, you know, we are rotational and we're trading below yearly VWAP, so it's not the best case in terms of higher time frame longs. All right. And do you prioritize profile levels or VWAP levels? So what I tend to do is I also look at TPO. So let me just open up the charts in terms of TPO. It's a mess right now, but let me just get into the Hall of Shame. So TPO, if you look at my TPO layout, it is basically, it's a mess right now, but look at this. This is regular daily values. This chart is regular daily values, but as you can see, I have merged profiles together here when there's a value overlap into composites. Then right here, we've got monthly. Then right here, we've got weekly. So I think for me personally, when trading intraday, I mainly focus on what type of inefficiencies do we have? Do we have a naked point of control? For example, let me zoom in here. Do we have naked point of control, right? Do we got a single print, a gap, poor highs, poor lows, and so on? And I look for them around levels of VWAP. So single daily profiles, you will almost never see me use it. My preference is we're either going to be looking at, for example, and let me, first before I start clicking here, let me just clean up this chart for you. Get rid of that, get rid of that, get rid of that. So my preference is This profile right here is 13 days merged together. What does that mean? It means that we have 13 days where we have overlapping value, right? Value areas overlap with the previous one. I merge all days together, and that gives me a 13-day composite. Fast forward to today, we auction upwards. Everybody gets really bullish. Where do we cap the rally? At the 13-day composite value area low, right? So to answer your question more specifically, do you prioritize profile levels? Only if it's a, let's say, 5+ day composite. You will not see me use single day profile because in my opinion, a prior week value in terms of VWAP is 7 days, right? So that has more weight to it than a single day. Does that make sense? The weighing, for example. When you've got a single week, it's 7 days, right? So a single day is not as relevant as a weekly profile, in my opinion. So we'll get back to TPO in a bit. Moving back. Can we all agree? Are we all on the same page that yes, we're seeing some buying stepping into the market right here. However, on the yearly time frame, we're still trading below yearly VWAP, and that's going to be the most important point going forward. And I'll wait a bit because we've got a delay in the stream with the chat. Because I'm streaming at 2K, not 1080p, but it is what it is. It's even, it's better than Twitter because Twitter is like, what, 720? Like absolute dog shit when you're streaming on there. But in my opinion, yearly value right here, we are auctioning between these two pivots, value area low support, value area highs resistance, VWAP as well. If I take this towards quarterly, we've got a couple of interesting points here. The first thing that I want you guys to know is that if we take a look at, are you guys familiar with the laws of market dynamics? We've got a law which is called law number 2. When price recently accepts back within value, it will attempt to traverse to the other side. What does that mean? It means when we're accepting back within value, for example, if this is our value area and we accept, right here we're auctioning lower, right? We're trading lower, we break below quarterly developing value, really bearish, which is why I said, if we're closing below 55K, it's pretty shit because, at that point we're closing below previous month value area low, we're closing below quarterly developing value low. It was a really important pivot in my opinion. If Bitcoin would have been bearish, this should have held as resistance. In this case, we were sawing some two-way trade here, and now we're back above. Now, what does this tell us? It tells us that we're accepting back within previously established value, which is this quarterly pivot. That means that going forward, and I will show you that in the next slide as well, but it means that any retest back into this value area low can be seen as a buying opportunity, because this is the area where Bitcoin shifted from being imbalanced down towards a rotational environment again between quarterly VWAP, quarterly developing value area low. So take note, 55K is support until proven otherwise. All right. What is the next likely destination purely based on quarterly value? It is going to be quarterly VWAP. Now, of course, we've got monthly value to work with as well, so we'll take a look at that later on. But for me personally, likely destination is going to be VWAP. Now, why is that? Well, the exception to law number 2 is a strong point of control rejection. That means even if we auction higher and we get a harsh rejection, right? We take out all of the highs. We should not be stubborn thinking, oh, this is just a lower time frame rotation. No, this could definitely be the case of law number 4, where we don't really go all the way back towards developing value area high, right? But instead we reject and we head towards the lows again. Okay. So yearly is, we don't have any auctionable insights on the yearly. It's rotational within lower value. Quarterly is telling us we try to break lower and we fail to do so. And now we're back above. So if we're bullish, and that's going to be a big if, but if we're bullish, value area low needs to hold a support going forward. So if we're going to be seeing a dip back into value area low, I'll be looking for longs because my invalidation is a clean break back below. At that point, I think where are we heading? Once we start losing this level, we're going back towards the yearly. And at that point, it means we're trading back below the 2021 value area high. What's the destination? Yearly value area low, right? There's that. Carl says, all of this price action looks corrective from the 49 and 60K seems to be important initial level. Yeah, I really agree with that. Do you know what? Let me just show you 60K. This right here, monthly TPO. Let's get everything within this. Get in here, right there. And let's get rid of all these merges. So what's the development? The drawing tool that I'm using is, I believe it's called Zoom It. Let me just type it out for you, bro. Check that out. It's Windows, so I think it's Zoom It. So you know what we currently have here. This dynamic is we have 1 month, 2 month, 3, 4, 5 months of overlapping value. If we go by the rules of market dynamics, we can merge these months within the previous month. So let's do that, right? Right click, edit. Hey, this month has a 50% value overlap with the previous two. Right click, merge. Well, shit, this month as well. Right click, merge. Damn, this month as well. Right click, merge. And then this month is where we're like, well, shit's hitting the fan. And, you know, we auctioned lower, tried to accept back within this 5-month composite, and then we failed to hold the support. This is really bearish. And the distribution, the value area low from this distribution is around 62K. And that's confluent with previous quarterly value area low. It is confluent with previous month value area high, which I will show you in a bit. So yeah, Carl, I 100% agree with you that 60K-ish up until 62K, this entire region, right here, this is where we're either going to be going back within the bull market, or you know, we're going for another failed attempt back within value, and then we start to dribble lower again. I genuinely think that if Bitcoin in the market can show strength back within this composite, the next likely destination will be point of control, followed by value area high at 70K. Okay, but until that happens, 62K is going to be extremely important. Moving towards the next one. Right here, number 3. Was it number 3? No, it was not number 3. We've got number 4 already, and this is monthly value. So do you see how we're building a plan here, guys? We're starting off on the yearly. The yearly is telling us rotational within the lower boundaries of value. That's fine. The quarterly is telling us we've just accepted back within value, bullish towards quarterly VWAP, right? And then right here, right, 62.2, previous quarterly value area low. Right here, monthly. Let's take a look at the monthly. Martin says, do you use CR charts daily? Is it worth it? Would you recommend it? I'm using only what's TW? Trade? You mean trading view, or would like to have a deeper look on footprints and market profile, for which CR chart seems to agree great. Honestly, like Grant says, I think footprint charts, go for extra charts. It's way better. And let me just have a look. I think I have extra charts on this account as well. I'll show you. It's loading up. Let me show you the difference, okay? And I mean, trading view for TPO is perfectly fine. I'm not saying that Sierra chart is better and you need to be using Sierra chart and so on. But I would say if you really want to, you know, if you want to have everything in a single platform, I'd say go for extra charts. Extra charts is perfectly fine for that, right? You can have some cool optimizations in terms of, you know, delta and whatnot, TPO. And then right here is order flow, for example, right? It's whatever you, whatever your preference is. But, you know, I think this works wonders. The only thing that I would argue is that, you know, while Extra Charts has a lot of cool features, I would have liked to see, for example, right here, but it's just me, right? But I want to have, where's my rectangle extension tool? Like, we don't have that. And I also want to be able to draw on this chart, and it needs to plot on this chart. But maybe I'm retarded. Maybe we can already do that and I just don't know how. But I think, Sierra chart has like a million optimizations, million settings. But if you're just getting started and you want to get familiar with TPO or order flow in general, I would say TPO and TradingView is more than enough, and order flow and extra charts really is better than Sierra chart. So you go right click, chart settings, go to TPO, and you want to go towards volume profile. Why is it not showing? I think this might be a bug. Chart settings. I think it is because, one sec, let me just try something. Chart settings. Yay, TPO. Let me just show it like this. It's because I'm rescaling it. So go to TPO, volume profile, and then I want to have profile text type, delta. I want to have delta % of session. You just copy my settings here. And then show volume profile. Don't have overlay profile, and I have all this selected, and I have, I think I did the opacity. Are you able to do that? I don't know. I just had this. Oh, no. I did the background color similar as the chart with these settings. And then on TPO, I've got this. Blocks letters. And I don't use session split. Point of control value area, right? You can rewatch the stream. Single prints. Nothing really fancy, to be honest. I just want to be able to see. I think it's nice to be able to see what are we doing at the highs or the lows. For example, right here we can see there's a lot of aggression here at the highs in terms of people opening up fresh longs. But yeah, I think extra charts should be more than enough for you, right? You're welcome, man. You're welcome. So moving forward, where we're heading towards monthly value, we can clearly see that right here, we've got this box. This is previous month value. We can see the interactions here, very clean, support, and then we broke lower. Now, if if the market was bearish, one thing that I like to do is I like to ask myself during my morning prep, like, what happened during the overnight session, or what happened in general, and how good of a job is the market trying to do or doing at it, right? And in this case, it broke below previous month value area low. Previous month value area low was confluent with quarterly developing value area low. So this was one big ass resistance, and it should have held as resistance if the market would have been bearish, right? But as we said before, there was a lot of uncertainty within the market, right? We had pull-call ratio spiking towards its highs. So, we could have expected a mechanical bounce upwards because these guys needed to cover. Now, moving towards this chart again, we see that law number 4, price often retest areas where the condition has shifted. To me personally, that means if and when the opportunity comes when we're getting a big flush lower back into previous month value area low confluent with quarterly developing value low right there, I personally will be looking for longs. And I'm going to be targeting poor highs below previous month VWAP, which is this line, into yearly VWAP, because yearly VWAP is confluent with previous month VWAP, and that makes it a great case for if we're going to be seeing a cap on upside. I expect it to be somewhere around here. Take out the highs, right, into previous month VWAP, confluent with yearly VWAP, and then we'll see what happens. If we flip this, what happens then? Well, in my opinion, that means we have a new shift in condition, meaning we're accepting above point of control, or in other words, VWAP, retest it, look for longs there, and we're going to be targeting this structure right there, right? Previous month value area high. Now, where's previous month value area high coming in? Look to the right, 62. I can't, whoops, I did the wrong button. Right here, let me just show you, 62.100. Now, where have we seen this before? Let's take a look at quarterly. Where's quarterly value area low coming in? It's around 62. Damn, we had it somewhere else. Let's take a look. Let's go back. Oh shit. We've got a 5-month composite value low, 62. So I think going forward, it is safe to say that 62K will be our ultimate bearish line in the sand. Right? Now, if we go towards this chart right here, we've got fine-tuned 61.950. This is fine-tuned. It's an average of all the pivots that I just discussed. If I were to put everything within a single chart, I'd say, and this is where, the final bit comes together. We had a bearish line in the sand initially when we lost this area support. We were trading lower. Then we saw consolidation. We had plenty of time and space between the actual retest. If Bitcoin genuinely wanted to go towards yearly support around 50K, it should have happened here. But it didn't. Instead, we broke through. We left a fair value gap there, which means that we have a reason to revisit this imbalance, right? Rebalance the inefficiency. And, we've got a bunch of poor highs there. We've got another fair value gap there. We've got equal highs here as well. Another fair value gap there. So what I'm thinking is that our bullish line in the sand is this area right there. And the highlighted area is the quarterly developing value area low and the previous month value area low, around 55.7K. If Bitcoin is bullish, no matter what happens, right? If we get weird headlines, if we get, super high inflation prints or whatever, right? And all of a sudden the market starts to do weird stuff. I still believe that from a structural standpoint, if we're bullish, I don't care what happens, but this needs to hold. Even if we start trading below it, but eventually we start closing above, right? At that point, I think it is safe to say that I'm not going to be drawing a meme. Yes, I'm going to do it. I think it's safe to say that we might be in for upside. And at that point, I think the next likely destination will be previous month VWAP alongside yearly VWAP at 58.8K. Whether or not we're going to be accepting above, I don't know, right? I don't have a crystal ball. I wish I would, because at that point, I would perfectly know where we're heading every time that I would trade myself, but I don't. So I'm going to go by the data points that I have. And in this particular stream, I know that we have just failed, and let me just clean up the chart once more. I know that we have just failed to trade below previous month value low and quarterly developing value low, right? Now we're back above. We formed a gap. So I know, all right, well, I have some alerts here. If we revisit this area and we see the things that we want to see, we see, seller absorption, or we see exhaustion, or we see spot taking the lead here, I want to be a buyer. And I'm going to be targeting inefficiencies into previous month VWAP, right? Because I think we do have a reason to go higher, which is these equal highs. But then again, I need to see this level hold of support, which is 55.7K. Then we will see what happens. If we get a large rejection, sure, I'll take a short and I'll play this range, because the ranges that I'm going to be trading are these, right? Acceptance back above, perfectly fine. Going to be taking longs, and I'm going to be targeting equal highs, fair value gap into the ultimate end boss, right? This is like if you're playing Mario or whatever game, and we all know that one final boss that's just a pure pain in the ass. That's 61.950 for us, okay? Above that, and it's game time. I think, we'll see a lot of fireworks when we start trading above that. And, with that, I think we've covered everything that I wanted to cover in terms of where are we in terms of yearly, quarterly, monthly, everything put together on a single chart. And simple as that. From an Elliott wave point of view, 55,340 invalidates an impulse wave 2, which is in confluence to what you're saying about short-term low. Also 62.4 is common target of the impulse. I mean, I'm not really familiar with Elliott wave in terms of I think there's a bit too much uncertainty about what wave I should be using, etc. But I think, yeah, I agree with those points. Like, those price points are really important. I appreciate you, Grant. Definitely, man. I mean, the thing is, there's a whole lot of difficult things that we could or difficult words, but the reason why certain things click for me is just because it's explained in a simple way, right? Like, no need to be fancy about it. Like, we can talk all we want, but, bullish line in the sand, we don't want to see a close below for upside. That's it. If we close below, we fucked. We're going to go 50K. All right, so one question that I have for you guys. Within this stream, I've used pre-made examples with annotations. Do you guys like that when heading over? Is the visibility good in terms of I would used to do it like this? Like, this is where you can see my entire layout, but I thought this would make more sense with some annotations and then go over it so you guys can see some explanations to go with it. If not, let me know as well. But I think, it's an improvement. Okay, that's good. That's good. So we're going to be using this from this point on. Well, trap traders is pretty straightforward. The thing that let's say trap traders. Let me just zoom in a bit more. Oh no, this is not going to go good. Let me just go into a chart. Give me a sec. Trap traders. So ask yourself the following, right? The first thing that's important for me always, before I'm going to be looking at any trade, it's very important for me to have higher time frame bias. Oops, I can't write with this. So whether that's going to be your weekly order block, whether that's going to be your previous month value area low, or whatever you prefer to trade, maybe a 200 EMA or a 100 weekly moving average, I don't really care, right? As long as you have a higher time frame bias. The thing that I would like to see is, I want to see the market auctioning lower, right? Needs to auction lower. And then ideally, it needs to form a low slightly above my higher time frame area of interest. It can tap it either way, but preferably we form a low without really retesting it. At that point, there's going to be a whole lot of traders anticipating that this is the actual low and we're going to be reversing, right? They will look for longs there. There's also going to be a whole lot of traders waiting for a final drive lower below this low, anticipating what? Another leg lower, right? Because the downtrend is this. This is the downtrend, right? The trend is down. Usually what happens is we're forming some sort of a range, short term. Everybody gets impatient. But most preferably, people are starting to long this thinking, all right, well, support is, is holding up. What I would like to see is one final drive below that low. Because one, we take out the early longs, right? Which are flushed out there. Two, we've got breakout traders thinking, oh my gosh, we're going so much lower. Let's short this fucker down. However, if we're going to be looking at this from a order flow perspective, what you'll see is that the profile will start to form. So let's say that this is the candle, right? Candlestick. And, if you look at order flow, especially with a delta bar layout, you can see that you see the bars pretty relatively thin. And then all of a sudden you get a large amount of selling delta here at the lows, right? And this is while the candle was forming. At this point, if you're seeing a candle form like that, you're like, oh, damn, there's a whole lot of selling interest here coming into the low. What I want to see now, so this is step one, yeah? No, this is not step one. Step one is high time frame support. Step two is auction lower and form the initial low. Step three, patiently wait for price to react or trade below that low and see an increase in participation here in sell delta. We need to see a whole lot of red coming into that low. Number four is when this candle closes like this with a wick. And all of this selling delta is now right there, right? Everybody shorted it, thinking, shit, we're heading lower. I need to short this. Everybody that longed this initial low thinking, fuck, I stopped out, but now I want to get back in. So we've got a couple of things. Once we start to see initiative activity, that's on the right side of the order flow tab, once we see buyers stepping in, willing to lift the offer, these guys will be the fuel for the next leg upwards, right? So I want to see an increase in open interest here on the leg lower and an increase in sell delta, indicating new shorts opening at market. Then I want to see a close be above their entry point. And when that occurs, we can expect them to move higher. Exactly. So that's what I like to see. It's pretty straightforward. But the most part where a lot of people will tend to fuck shit up is when they see an initial candle form here, like it's forming, right? We start to auction low. It's forming. And we've got maybe 5 minutes left to close the bar. And they're like, oh shit, we might reverse here. I'm going long already. Stop below this low. I want to get in as close as I can towards that low. But, in that time period, a lot can happen. We can just spike it once more and then eventually still close above. So I would suggest that normally I'm saying that, for order flow, you want to be looking at trend reversal bars and so on. But I think, during the current regime, start with the 50-minute chart or a 10-minute bar or even a 30-minute bar and look how it develops over time. If you see an initial low forming and we spike that low, look at what happens. Look at the sell delta. If there's an increase in open interest and an increase in sell delta, that shorts are opening at market here. And then think about it from a psychological standpoint. If you're the guy shorting this low and now all of a sudden we're trading up here, what are you going to do? You're going to hold it back up? No. You want to close your short as close as you can towards break even. What does that mean? It means that this entire short cluster from retards shorting below this previous low, they will want to get out. They're like, oh shit, let me out. The moment we start to retest this value area, let me out, which is what? Buying pressure because they need to buy back their shorts. And then we start to rally upwards. And that's it. Yeah, exactly. Like a CVD and a nice CVD divergence. What do you mean with range charts and extra charts? I haven't really used them, but I'm pretty sure there's documentation about that in their own website. So, an absorption is basically what we said right here, right? Anyways, if that was it, then I think this was a good starting point to start off the streams. Also, just know before I'm closing off the stream, if you want to know everything or want to get access to the Discord and so on, this stream is sponsored by Bybit, so I made a deal with them. You can click on the Discord link in the description below, and there's a affiliate tab where you can just link your existing account to my referral, and then once you start trading, you'll get free access to the entire Discord group. So if that's something for you, go for it. If not, that's fine as well. All right, guys. Yeah, I think that's it for today. Looking forward to get back into it. I definitely need to improve the quality of the stream in terms of bitrate and so on, but I'll make sure to fix that within the next one. Yes, it will be public on YouTube. Everything is going to be going live again. I've tried to stream on Twitter while the audience is, I get a bigger reach, but to be honest, the quality is utter garbage. And if I want to rewatch a stream and I can't really read what's on the right side of my screen, then, it's not really useful. All right, guys. Can you show me one more time how you add the view apps to your trading view? Well, this is a custom indicator for me personally, but if you look up qualified, I think it's this user. I think this is his username on TradingView. Not sure, but he has a free script as well. You could check that out. And let's do an altcoin stream later on. Yeah, I want this to be purely Bitcoin focused, and then next stream we can do altcoins. Perfectly fine. All right. I'm dipping out. Thank you all for attending the stream. Leave me a comment, leave me a like, helps me grow the content. And I'll see you guys in the next one. All right, take care. Peace.